Hello friends, I am Mohit Agarwal, qualified chartered accountant, company secretary and certified public accountant from USA. I am giving the video lecture over the surcharge on income tax. Basically, Finance Number 2 Act 2019 has changed the surcharge rates with effect from 1st of April, but it has been announced in the mid of 2019. So I am giving you the lecture over the surcharge on income tax. So the reference is circular number 8. The department has issued the circular number 8 of 2020 on dated 30th of April that if there is any short reduction in the TDS and TCS due to increase in surcharge, then they give the clarification that how we need to deal that. So Finance number 2 Act 2019. It has been announced in Parliament on 5th of July 2019 and it received the President assent on 1st of August 2019. They increased the surcharge rates but with effect from 1st of April 2019. Earlier the surcharge rates are, so if there is any income less than rupees 50 lakh, then the surcharge is nil, and in the new rate it is also nil. If the income is more than 50 lakh but up to 1 CR, then the surcharge is 10% in both of the cases, old rate plus new rate. And if the income is more than 1 CR but up to less than 2 CR, then the surcharge is will be 15% in both of the cases. If the income is more than 2 CR but it is less than 5 CR, then under the old rate it is the 15%, but now under the new rate it is 25%. And if income goes more than 5 CR, then the surcharge has been increased from 15% to 37%. So both of these cases needs more attention because they have the impact of new rate and old rate. Now I am explaining you the impact. So the impact, there are three categories who has impacted due to this. One is assessee whose income is going to tax. So tax will be assessed as per the new surcharge rates, that is 25% and 37%, whatever the case may be. Deducted, TDS need to be deducted as per the new surcharge rate. Now it is a very critical problems for the deductors because the rate has been announced mid of the 5th of July and it is with effect from 1st of April. So it is a hard impact over the deductor that TDS need to be deducted as per the new surcharge rates. Now, and collectors who need to collect the TCS, they need to collect as per the new surcharge rates. Now, issue faced by the deductor collector: short deduction collection of TDS TCS due to enhanced surcharge. If you see, the director has in the condition that they have directed the TDS earlier correctly, but now due to change in the surcharge, the TDS directed by them has been short, and they will become assessee in default without their default. So that's a very difficult condition, and if the condition that if you have the employee that is not anymore associate with you after enactment of this act, then you cannot deduct the TDS from his salary now. Then it is, you have to pay from your pocket, then it is a hardship over the director. So for this position the government has given the clarification. So clarification issued by the department is as below: if the transaction satisfied all of the conditions mentioned below. So basically department has issued some conditions that if we satisfy these conditions, then we not be considered as assessee and default, means the director will not be considered as assessee and default, and they can rate the TDS only as per the old rate up to 5th July. So what are the conditions? Let me show that. First is transaction completion date is on or before 5th of July. So if the transaction completion date is before 5th of July, that is a announcement date of finance bill. Yeah, please note, it is not the date of when the president gives their assent, that is in August. The date 1st August president gives their assent, but it is a date of 5th of July. So transaction completion date is on or before of 5th of July, and entire payment date is on or before the 5th of July, means the transaction has been completed and the payment has already made before 5th of July. So the transaction has been completed in all the manner, because we need to track the TDS as at the time of booking of the expense or at the time of payment. So in both of these cases, if there is any earlier condition is there, then we need to deduct the TDS. If both of these cases has been completed up to 5th of July, then we can complete this condition. The third condition is no subsequent transaction after 5th of July 2019 in 1920 from which shortfall of TDS TCS can be deducted. So basically under the TDS provision, we need to calculate the TDS on YTD basis. Under YTD basis, we need to calculate any shortfall, whatever has been remained, then we need to deposit in the later stage. So if there is and we have no choice because we don't have any subsequent transaction, in that case then only we can avail this uh, clarification issued by the department. But if there is any subsequent transaction, then we cannot take the benefit of this circular. So fourth condition is TDS TCS has been directed collected as per the old date. So we have directed the TDS as per the old date. If we have not directed the TDS as per the old date, and if there is any shortfall, then we cannot take the benefit of this circular. Next is such TDS TCS has been deposited on or before the due date. So this TDS need to be deposited on or before the due date. The term such is more important in this case because that need to be deposited on or before the due date for claiming this clarification circular. TDS TCS statement that the TDS return has been filed on or before the due date. So the TDS return and TDS payment need to be submitted to government before the due date. Now I am showing that if any one of the conditions specified above has not been completed, the director collector cannot claim the benefit of this circular. So he needs to be considered as assessee in default. He needs to pay the interest over that. He needs to pay the penalty, and in some cases he can also be liable for prosecutions. Now I am presenting you some case study. I have prepared total 9 cases. I will go one by one. So I am just hiding the answers so that it can be benefit for all of us. Correct. So first case is that the transaction date is 30th June and the payment is also had made on 30th June and no subsequent transaction there. Then the TDS need to be calculated on all date because it is on 30th June. Payment date has been done on the 7th July. As per that, within that we need to deposit the payment within 7 days, and the TDS return has been submitted on 25th as we have the date up to 30th, 31st. So the benefit of circular will be given? Yes. So the benefit of circular will be received because if we have any shortfall, then we are not liable to deposit the differential amount because we don't have any subsequent transaction. In the second case, transaction date is 30th June, payment date is 5th July. There is no subsequent transaction, but now the payment date is 5th July. So that means it is on or before. Yes, it is on or before. It is not the before. So if the transaction is on the 5th of July, then it also has the same status. Yes. So if there is no any subsequent transaction and the TDS need to be calculated on the old date. Why it is old date? Because we have deducted the TDS on the 30th June, and on 30th June the TDS rate is only the old rate. So TDS payment done has been 7th July, TDS is 24th July. So whether we can take the benefit? Please tell. Yes, we can take the benefit. So next, the third case is if the transaction date is 30th June, payment date is 5th of July, no subsequent transaction, old TDS rate, TDS payment done on the same 7th July, but the TDS return has been late on 5th of August. So whether we can claim the benefit? No, we cannot claim this benefit because the TDS return has been delayed. In the fourth case, transaction date is 4th July. So okay, no issue because it is before the 5th of July. Payment date is also 4th July. Subsequent transaction, no. TDS rate need to be done the old date because the finance act has not been announced. Payment date is 7th August. Return has been submitted on time. So we can claim the benefit of circular. Under the fifth case, transaction date and the payment date is both before the announced date. No subsequent transaction. Old date has been charged, but the TDS payment has been delayed. So we cannot claim the benefit of TDS. Of this scheme, we need to pay the shortfall. Under the sixth case, the transaction date is of 4th of July, but the payment date is 10th of July. no subsequent transaction, TDS need to be charged by the old rate has been, because the director has charged on the 4th of July, TDS has been calculated on that date. So now the payment and return has been filed on time, but the payment has been done on 10th of July. He know that the TDS rate has been changed now. He need to be ensured that the TDS rate need to be deducted, but he has not deducted, so the benefit cannot be claimed under this case because he has the opportunity after 5th of July. Next, 7th case under the 4th of July transaction date. Payment date is also the same, but there is now subsequent transaction has been happened, so TDS need to be put the on YTD basis. So TDS payment, and even if the TDS payment and TDS return has been submitted on time, but there is subsequent transaction, then he doesn't have any circular benefit of circular. For the next 8th point is this 31st July transaction date, 31st July payment date, means both are the after the announced date but before the assent of president. No subsequent transaction, then SIC need to calculate the TDS, direct the TDS as per the old date. Reason being because the president has not been assented till now, but we have the hardship with the director, he does not get the benefit of this circular. If the transaction has been happened on after the 31st, on after the 1st of August, that is 10th and 31st, so he needs to take the TDS as per the new rate, so the scheme is not applicable for him. Okay, now under the case number 7, basically where subsequent transaction has been held, the TDS deducted and collected can adjust the shortfall of TDS TCS. Basically, we need under the subsequent transaction, we need to calculate the TDS on YTD basis. So we can deduct the same, but now the case is that interest will arise. So what is the position of interest? No, interest will not be levied in this case. So government has given one more relaxation. If there is any subsequent payment and you have deducted the shortfall in that case, then you need not pay any interest. But if there is no any subsequent transaction and you does not satisfy the condition above, then you cannot take the benefit of the circular and you also be a SSE in default. So what is the position of the deductee? So the assessee need to file its income tax return after taking effect of enhanced surcharge, new rates, and he needs to pay their advance tax liability, their self-assessment tax liability. So what's the concern? Basically, if the circular is giving the benefit of for the purpose of TDS and TCS and interest thereon, but they are not giving any benefit to the assessee whose income is going to taxed. For that purpose, they need to they need to recalculate their advance tax liability, and if there is any new advance tax liability, then they need to pay interest over them also, and they need to finally pay their self-assessment tax and they file to their return accordingly. So I believe the point has been cleared. So it is my request that you will subscribe my channel, and I will try to give more updates on a regular basis over the income tax, GST and Companies Act. Thank you.